The accounting is a process of identifying the event of financial nature, recording them in the journal, classifying in their respective accounts, very important accounts, and summarizing them in a profit and loss account and balance sheet, and communicating results to users of such information. You will see when we get to grade 12 the importance of accounting when we report. Now, before we continue, we have to check English words versus accounting words. You know that the English words versus the accounting words, there are terminologies that we use in different subjects. So even in accounting, we use different terminologies. When we talk about slip, we are saying it's a document. We don't say it's a slip. It's a document. When we talk about book, we are referring it in accounting, it's a journal. When we say write, in accounting, we say record. We don't write, we record. And then paper, it's a stationery. In accounting, it's not a paper. And car, in accounting, it's a vehicle. Machine, in accounting, it's a equipment. Change in accounting, you see that money when you go to the shop early in the morning. When you go to the shop early in the morning, you will find that the tellers, they are putting the money there to give you change. We refer to it as a cash float. When you transfer, in accounting, we refer to it as post. You post it, you don't transfer. And then original slip, we refer to it as the source document. And then let's move on, grade 8. We have what we call a sole trader, which is a sole proprietorship. The person who owns the business alone. This person is running the business alone. You see there, the mama is running this business alone. You see that gentleman there is running a fish business. He is alone. So the sole trader is the person who is running the business alone. And then buying. When we talk about buying transaction, I wanted to say the transaction. The transaction is the place where the buying and the selling takes place. You see there, that lady is selling vegetables to that little gentleman there. That the transaction is taking place there. You see there in that informal business, mama is selling some also vegetables to that gentleman also. That is the transaction. What they are busy doing there is the transaction is taking place. And then we have in accounting what we call owner's equity. What is owner's equity? Properties of the owners invested in the business. That money that the owner that is invested in the business, we refer to it as the owner's equity. It belongs to the owner. And then we also have what we call capital. Capital is money from the owners used to start or boost the business. You remember the previous slide I talked about money. That money, we use it to start this business. The money used to establish this business, we refer to it as the capital. And then again, we also have what we call drawings. What is drawings? Drawings we refer to as money of the business taken by the owner for personal use. So if you are having a business, if you take money that belongs to the business, we refer to it as a drawings. It will be recorded under the drawing. You see that lady, she is the owner of the business. Now she is eating that apple. So that money of apple, if it is 5 rand, 6 rand, 9 rand, that money will be recorded as drawings. It won't be recorded as a loss or as a profit. It will be put aside as part of drawings so that we are able to trace how many drawings is the owner making during the day or during the course of the month. And then we have what we call profit. What is profit? Profit is the difference between the cost price and the selling price of the goods. Cost price and the selling price of the goods. Like for instance, this person bought the pigs, and he bought the pigs. After buying the pigs, and then is transferring those pigs or is converting them into a product, and then he's selling the total product to be 1,500. So the difference between the two, it is going to be 500. That will be the profit of that person or that owner. And then we have what we call assets in the business. Assets in the business are all properties of the business. It can either be the vehicle. You see the Houston is moving around there on our roads there. That is the property of the business. It's a vehicle of the business. You remember I said in the business, we don't say a car or we don't say a lorry. We are saying it's a vehicle. All the equipment that are used, all the office, laptops, chairs, we refer to them as the equipment, and they are the properties of the business. These particular shelves, these shelves that have been used here at ShopRite, we also refer to them as the properties of, they belong to the business. And also they have put the stock there, the stock that is going to be sold to customers. It belongs to the business, it's the property of the business. And again, as we continue, grade 8, we have equipment, as I've mentioned in the previous one. This is the equipment of the business, as I've indicated. You see, this is the meeting that is taking place in the boardroom. They have used the table, big table, the chairs. Those chairs that are the equipment, the furniture of the business. And you see here, Pepsi, Coke, they are saying you choose which product do you want. These machines that are used here, they belong to the business. It's an equipment. We refer to them as equipment. We don't say it's a machinery, it's an equipment. These machines that are used here to produce or to extract oil from the bottom of the sea, we refer to them as the equipment. And then we have vehicle in the business, as I mentioned. All cars that are owned by the business, they are moving on the roads there, they are delivering our products, we refer to them as the vehicle. We use them to transport our products from our business to our customers. And grade 8, we have what we call liabilities. What is liabilities? A liabilities is an obligation that a person or a company must meet. So meaning if you are owing someone, you have an obligation to do that. And then, as I briefly explained, personal liabilities, we can also refer to them as a credit card debts that a person is having. A student loan, you have to pay it at a later stage. At home, you are having, your parents is having what we call a mortgage bond. And then those are the future obligations that the person will have to meet in future. So in a business, liabilities, we may refer to them as a bonds, as a taxes that must be paid to government. We also have the business have to make the debts. And then we also have a pension payments. These pension payments must be paid to the pension company, see, so that that money can be saved for our workers when they retire. So it's also the liability that must be paid. So this liability, is it good or bad? It is bad because why? We have to pay it off in future. But when we pay it in future, why did we make the liability from the start? It was good we have to make the liabilities because it can help the business to grow. You don't just make liabilities, you make it so that the business can be helped to grow. And then We have what we call a loan. We have what we call a loan. A loan is the money borrowed by the business. It can borrow money from the bank. It can borrow money from other institutions, financial institutions. It can borrow money from the government. It is a loan. They will have to repay it back with an interest. Again, you don't just pay it back, you pay it back with an interest. And then we also have what we call a creditor. A creditor is what? A creditor is the business which is owned by the business. If we are owing someone as business, we refer to that one as a creditor. We are owing someone, that person becomes our creditor. The reason why we always cry every day when we have to pay that person, because we are losing the money is going out. But it is good because at the end of the day, the other business is surviving because of the other one. So we must have creditors, because at that time, we might not have the money to buy that goods that we want to sell. So we make arrangement with that company to say, hey, look, let's make an arrangement to say that we will pay you at a later stage, give us 10,000 stock, and then we sell the stock, and then we'll pay you at a later stage. So immediately when we have that agreement, that person or that business that we have an agreement that will pay monthly, that business is a creditor to us. And then we have an expenses. Expenses are the payments by the business to supplement business operations. Learners, just know this. The business will never operate if they don't have expenses. They must have the expenses so that they can operate. So expenses are the day-to-day running of the business. So they pay expenses. You will see when we get to that one, when we refer to an expenses, types of an expenses. Here, example that is shown here, expenses that we pay here will be the people who are operating these machines to make these cars. We have to pay those people. We have to pay those employees who are operating these robots to operate. So we have to pay them. So when we pay them, it will be part of the expense. The electricity that is used here, so that this robot can function, it also form part of an expense, because without that electricity, we won't have this robot functioning. So we must pay that electricity so that these robots can function. And then we also have what we call income. What is an income? Income is money received by the business, but not part of sales. We receive an income. Maybe as a business, we have rented some of the buildings to other people or to other business. We never sold something to them, but we are renting them. They're part of the building. So we are expecting to receive an income in the form of rent income. Also, again, as an individual, we can refer to, if you are earning a salary, it's part of your income. For argument's sake, bonuses is part of your income. And then in the business, we have what we call a commission. Commission, it also forms part of the income, because the business will render a service to a client or a customer, and then they are expecting to get a commission out of that. And then as an individual, we can say you are having a side hustle. Side hustle is when you do something aside that you are planning to make at the end of the day, having an income or receiving something out of that. It is called a side hustle. And then also freelancing and other incomes that you might have. And then in accounting, we also have what we call a source document. What is this a source document? A written evidence that a transaction took place. Written evidence that a transaction took place. And then electronic transfer. We also have that what we call electronic transfer. These are the source documents that we have. The first one is electronic transfer, EFT. What is EFT? It's used to move money from one account to another. The transaction is completed electronically. Receipt is a written evidence that the money has been received. And then we have a deposit slip, a written evidence that money has been deposited in the bank. If someone is going to deposit the money in the bank, you must request a deposit slip. And then also we have what we call a cash register slip, a till slip. The slip that you are getting after buying, it can either be ShopRite Checkers. It's an evidence that cash sales has taken place. And then we also have what we call source document called bank statement, an evidence of how money was deposited into and withdrawn from the bank account. When the money is getting in, is getting out, where you want to check, you go back, you request what we call a bank statement. And then also we have what we call a cash invoice. It shows that goods or services have been paid for. And the last slide here, we have an expense. The expense, the cost of item which supports the running of the business, as I've mentioned. Without the expense, the business will not function. We also have the rent expense, money paid for land and building. Rent expense, if we don't have a building but we want to start a business, we are having the business, that business must have a building. We are renting a building from someone, we'll expect to pay that person the rent. So it's an expense, it's called a rent expense. Water and electricity, as I've mentioned, money paid to the municipalities. Wages, we refer to weekly or fortnightly payment to workers. And then salaries, monthly payment to worker. And then telephone, we have to make calls. Ne? If we have, or when we make calls, we are expected to pay. It can either be to Vodacom, MTN, Telco, whoever the contract that we have made a contract with, we have to pay that money to that particular person. So money paid for the business, telephone bill. And then fuel, you remember I've mentioned that we have vehicles. Then those vehicles must be put petrol so that they can run, or diesel. So money paid for petrol or diesel used for business transport. And then interest expense, money paid for interest charge on cash loans. Because if you took a loan, you're expected to pay an interest. Repairs, money paid for repairing or fixing business equipment vehicle, because sometimes our vehicle tends to be broken, or if someone fixes the tire, if we have a puncture, then that person is expected to be paid. So it falls under the repairs. Stationery, as I've mentioned, money paid for books used in the business for recording. And material costs, money paid for materials to be used for packaging. Insurance, money paid to secure the business against fire, thefts, and disaster. This insurance, you remember, we must have the insurance in the business so that we can be able to safeguard our equipment, vehicles, and buildings, so that if anything can happen, then we know that we have insured those assets of the business. And then bank charges, money that we paid to the bank because we are using that particular bank. They charge us monthly when we make transactions. So it falls under bank charges. And then lastly, we have advertisement so that our product can be known. We must advertise our product. So when we advertise our product, we can advertise our product to television, radio, or social media. We are expected to pay for that advertisement. So money paid for making the business known, because that business will be known to the public. So these are all the expenses that we have, all the expenses that we are paying for the running of the business, learners. And that is the end. Thank you very much. The quiz will be posted in the group. The quiz will be posted in the group. Thank you very much.